When you're buying a house, should you take a loan from your 401k? Is that sometimes better than a mortgage? We're going to talk through that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Interest rates have skyrocketed this year. Yes, they've come down off the highs. Thank goodness, right? They were over 8% there for 30 years. But they're still significantly elevated from the beginning of the year or a year ago. And gosh, if I'm buying a house, obviously, things are changing in the housing market, and I've heard some people say, hey, I think there's going to start being some deals and we're going to, start looking well. If that's the case, should you consider taking a 401k loan to help buy the house instead of a mortgage or in part to kind of supplement a mortgage? I mean, you look at this interest rate and you say, gosh, on the mortgage, that interest rate's so high. If I take a 401k loan, at least I'd be paying myself the interest instead of having that money go to the bank. Boy, maybe the 401k loan makes a little bit more sense. Well, let's dive into it. It's not that easy. First and foremost, there's lots of 401ks that don't allow 401k loans, okay? So you first need to explore, do I have a loan capability on my 401k? Because you can consider this, till you're blue in the face, but if you can't take one, that's an easy decision, right? So you first need to check and confirm that you can take a 401k loan. Next, then, well, what's the limit? And this is where it's going to stop out a lot of people. If you're taking a 401k loan, your total 401k loans, not just this one, not each one, but your total 401k loans, the maximum, the limit is up to 50% of your 401k, but only up to 50 grand. So if you look and say, well, yeah, my 401k is $500,000, and I need a loan for $250 or $200 to buy this house, so I'm good because it's less than 50%. No, the cap is 50 grand. Now, during COVID, they made some they made some exceptions, and the limit moved to up to 100%, up to 100 grand, but that was temporary. That's gone, right? It's now 50% up to 50 grand, and that's total for 401k loans. So if you've already tapped this and you've already got a 401k loan out there from before, it's not going to go very far, okay? If your balance isn't that large, if you've only got 10 grand in your 401k, you can go up to 100% of that. But then again, we're talking about using a 401k loan to buy a house, and that's not going to get you a house. It's not going to get you anywhere close. So most people, you're going to look and say, yeah, this is not realistic because the loan that I need in order to buy the house, unless I've got a ton of equity, it's going to be more than the 50 grand. If not, we'll continue here, right? If you're still saying, well, I need to make this move and I've got a lot of equity, I just need a little loan. Yeah, the 401k loan, again, I only need 50 grand, so I could draw that. And the interest rate I'd be paying to myself, okay, check that. There might be a 401k loan fee, but it's now nowhere close to closing costs, so maybe that's better as well. And now where you start getting to the brass tacks, and that is the interest rate. Now, take a look here because I actually walked through each 401k, their interest rate might be a little bit different. There are some parameters. Yes, I get that, but take a look at mine. And I was surprised. I sort of thought it'd be 7% or sort of with the market, 9%. The interest rate, and that kind of goes back to, well, yeah, when mortgage rates were around 3%, 401k loan interest rates were around 5%. So I don't think there's an arbitrage play here. Yes, you're paying the interest to yourself back into your 401k and not to the bank, but because it's a higher interest rate means a bigger payment, means there's more sacrifice somewhere else because your payment needs to be bigger. And then that's sort of the final strike here. If you said, no, I'm still fine with that. I'd rather pay myself 9% than pay a bank 7%. Well, what's the term of the loan? Many 401k loans have a 5-year payback period, okay? Except if you're using it for buying a house. Then you can have a longer term, even up to 30 years. So you might say, well, then what's this guy talking about? I can get a 30-year loan on my 401k. That's what I should do. Yeah, but what happens if you leave your employer? How many people are going to stay at the same job for 30 years, especially 30 years from, the point that you would need this loan in order to buy your house? No one, essentially no one. So what happens to the loan when you leave that employer? Well, most, and I'm going to say 99%, you can't continue to make your loan payment after you leave, because your loan payment is coming right out of your paycheck. And when your paycheck stops because you're no longer employed there, your loan payment stops. And again, I've seen some where you're allowed to set up a private pay and where you that's rare. I've seen that's rare. Maybe the industry adjusts and we see more of that in the future. I think it's pretty rare. So therefore, you've got this 401k balance out there with an IOU inside of it and no payment being made on it. And then at some point you want some flexibility with those dollars, or maybe you retire and you move that 401k over to an IRA, and what happens to that loan? That loan gets sent out as a distribution. It's charged as a distribution. I don't know the right term. Charged is probably the right way. It's converted into a distribution, and it lands as taxable income on your tax return. And normally that's a surprise, right? If you're not yet 59 and a half, it lands on your tax return and you've got to pay a penalty. But even if you say, yeah, I'm okay, I'm comfortable with that, and someday I'll retire and I'll roll this over to my IRA and I'll be fine, I'll be past 59 and a half. Yeah, but there's no tax withholdings on that. So say there's 20 grand still left on the 401k loan, you roll the 401k over to the IRA, it lands as income, 20 grand on your tax return with no withholdings, and now you've got a plan for that too. So that's sort of the crux of the issue is, yeah, the term might be okay, but there again, if you leave the employer and you're not able to make that loan payment, now that really turns into a delayed, the delayed recognition of a 401k withdrawal, which has tax consequences, potential penalties. So by and large, you've got to work with your certified financial planner. Your CFP should be agnostic about ideas. They should love all sorts of ideas, consider everything, but knowing which ones apply in which situation. And I don't think a 401k loan should be a go-to strategy when you're buying a house. A couple other pitfalls when the money is, the money that you've loaned, you've borrowed from your 401k, it's no longer invested. And you might say, well, yeah, market's up and down, and so that's good. And some people use a 401k loan as a strategy to say, yeah, I'd rather take this money out and not have it invested. Well, but just know, especially if you're doing a longer term than 5 years, that money's not appreciating in the markets, not inside the 401k. And then second, lots of 401ks, you're not able to make 401k contributions while you have a loan. Your loan, what's coming out of your paycheck is going to pay the loan, not going to pay the loan and contribute back to your 401k. They disallow it in many cases. So you've got to figure that out as well. Work with your certified financial planner. I don't think it's a go-to strategy. Consider it with your CFP, but know that there are risks. So if you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K. WiseMoneyShow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.